Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, January 29th, 2010. Well, folks, a wild market on tap again today as we got GDP numbers this morning. Initially, those GDP numbers spiking the market higher. You can see the market opened with a small gap up and then started to race to the upside all the way to the 200 moving average here on the SPY. But once that 200 was hit, that was all she wrote. The market tumbled all the way back down, turning negative, then bouncing back to the positive side, then back to the negative side. And right now, you're seeing the market on the mixed side with the Dow up about 25 points, S&P down about a point, and NASDAQ down about 14. The big drag on the markets today are the technology shares. Again, you can take a look at stocks that after the bell on earnings had a decent move up, like Microsoft, but have ultimately dumped out dramatically. Take a look at Microsoft here, folks. A big gap up all the way up here to about $30, and then from that point on, it has reversed almost $2 to the downside. What a reversal there on Microsoft. The other stock with earnings was Amazon. Amazon did open up higher and has faded, although it is getting a little bit of a bounce now on the chart. So keep a close eye on these shares right now. Technology, again, the big drag on the markets. You can guess what other stocks are dragging. Apple Computer is getting absolutely annihilated here. AAPL is the symbol, down about $6.50, creating another bear flag here. Look at this, down move in spirit of bear flag and drop to the downside. That in spirit of the bear flag tells you it's dropping down. That's exactly what's happening again here, down $6.50 on the day. Look at this daily chart. What a rollover on Apple now, from basically a high of 215 just a few days ago, now all the way down to about 192, 193 on the day. The SPY again, folks, is setting up again for somewhat of a flattish day. We're into major support being some key level here at 108. That's a master level. 108 is a master level. Again, as long as this market holds it into the close today, you have to continue to be in a neutral stance to possible upside bounce status, but for the most part, you want to watch to see if that 108 gets closed below. There are some key plays out there. We've talked about some good plays for a bounce. Again, more profits taken in the intraday stock chat and in the research center this morning as the gap up enabled all those plays we loaded up on into the close to be sold and taken at break even for the second half. And again, just rotate out of those plays, let the market come back in and do a rinse and repeat. Rinse and repeat stands for buying into the close in this situation, on the gap up selling, and then letting it fall all the way back down and then buying right again. It's a beautiful thing there, guys. And again, the research center subscribers profiting like no other in 2010 so far, along with the intraday stock chat. Tremendous profits across the board right now. Spiders remain down about 19 cents. You do have a little in spirit of bear flag. This support line is decent right now. This is at 108.30, but if this breaks and there is a bear flag forming here, then you're going to go down to a double bottom at 108, 107.90, right in this area. That will be a huge amount of support right there, and that can be played as an intraday scalp play and possibly a play to pick up some long positions in this market. So watch that closely, folks, again, as that pattern continues to rotate and form. Now, taking a look at the 60-minute chart on the SPY, you can see clear as a bell, this is your key level. Anywhere between this lower 108 level all the way to this 108.30, that's what you're holding on right now. The market is not sure which way to go right now, either falling back down to this 108 and piercing it, or rallying back up, going back towards the Great Wall of China here at 109.68 to 110.34. Big areas in this market, big times right now. The volume, again, has really picked up over the last couple weeks, where we're doing close to 300 million most days in the last couple weeks. That is a big increase from days when we barely did 100 million at the beginning of the year and in December. Now, you can see the Qs. Let's touch on the Qs because that's technology. The Qs have been roasted today, down about 47 cents. That's great for the QID, which we currently do hold, up 45 cents. Look at the QID to the upside here, folks. Unbelievable move to the upside on this QID from basically 18 bucks back about a week ago, now trading at 21.50, 21.30 right in this area. And again, what a move there, as it's really appreciated in value. In addition, yesterday, we all know, unloaded the EDZ at the highs of 612 yesterday per the chat room, per the research center call, and again, moved out of that play after some unbelievable gains from about $4.30 all the way to $6.12. What a percentage gain, 50% gain on that EDZ from those lows. Again, folks, this is all available in the Research Center, the hot charts and alerts, pro trader watch list, nightly technical analysis videos of 60 minutes in length. All of that is combined into the Research Center. You get it all. The chat room is separate and unbelievable with the calls that have been going out. The money that has been being made right now is second to none out there. And again, we encourage you to come and join us and test us out for 1 month. See how we are doing, and you will never leave in the money stocks again. Going back to the SPY, keep your eyes on this pattern, guys. Look at this. Still in spirit of. This is still an in spirit of bear flag. If I had to read this right now, I'd say this tells us that there's a decent chance we'll fall down. The only way we won't fall down is if the count system fails to roll us over here, which again is key in this candle, this current candle. If this candle does not break down here, you may look for a pop on this market back up. Remember, a lot has to do with counts. In the Money Stocks is famous for their count system analysis, which again we've kind of discovered some key plays to utilize there, plus price, pattern, and time. All of those rolled into one give you the best opportunity for this market. Again, the odds right now in this current candle favor the downside. If it doesn't break down, you can start to look for an upside move. We'll talk to you soon, folks. Take care.